Okay, recording this video after close of trade Wednesday, 4th of June 2014. Hope you had a good day's trading today. I want to talk about exhaustion patterns in today's video because I got some questions by email over the last couple of days asking about the exhaustion patterns, particularly on the 4,500 tip bar chart. So I do want to respond to those. But before getting on to that, just to say, these videos are kind of getting out late to you if you subscribe by email. I keep on missing the cutoff window for distribution of emails just because of the time zone change. I'm in Sydney, Australia at the moment, kind of recording these, and so getting these out before, at a decent time after the close is pretty difficult, particularly if I've been trading late into the night here. But there's a solution at hand, working on that, so hopefully I'll have news about that in the next 2 or 3 days, and we'll get a solution for the email subscribers where you'll get things almost instantaneously as they're published on the website. Okay, let's talk about exhaustion patterns now. First question was from Tom. Hi Barry, if you do a review of today's market action, Wednesday, I would appreciate an explanation of what is happening on the 4,500 tip bar chart. We broke above resistance on the 4,500, so I'm expecting pullback to end of trend, correct? But we got numerous exhaustion signals, both buy and sells. A little confused what's going on. Thank you, hope your trade's going well. Best, Tom. So, Tom, first thing to say is we're really in kind of unusual times. I mean, there's always something happening with the market which is kind of driving the market, but at the moment, we're breaking to new highs and the volume is just incredibly light. Here was today's volume, 0.7 million contracts traded. This is just such light volume. We're so used to kind of million plus contracts traded a day. This has really kind of fallen off. Now, I don't know what the answer is. I definitely think there's kind of a lot of, there's not much interest. I mean, this is showing up as no demand patterns and Rambo patterns on all of my, higher time frame charts. But the other thing that's kind of curious to me is the impact of high frequency traders. And I've marked here the vertical line, which is when Michael Lewis went on, I think it was CNBC, talking about high frequency traders, and then within 48 hours or so we got a whole bunch of little announcements saying that the FBI were potentially probing the high frequency traders and so on. And I don't know, I just wonder if the high frequency traders have kind of backed off a little bit, and that's one of the reasons why we might be kind of light in terms of volume. There's been a couple of good decent days at kind of up to almost 2 million contracts traded. You can see the little spikes here, but when you look at this in kind of context, going back a year or so, the volume that we're seeing at the moment, particularly over the last 2 weeks, has been incredibly light. The result of that, in terms of exhaustion patterns, is what I'm finding on my tip bar charts and my minute charts kind of looking during the day, is we're getting very few exhaustion patterns on the upside. We're getting quite a few on the downside. There's lots of people kind of interested in selling. But they're way too early, and the market just kind of keeps on being kind of busted up to new highs, and we're not seeing very many of those exhaustion patterns on the upside. Now, today was an exception. We got that on the 4,500. So that's just a little comment about kind of the lack of volume, what's going on. I don't know why it's so light, but we're just melting up at less and less kind of volume and no demand. And at some point, if we have a crack, I don't know, if we get another flash crash, the volume will come back in. So let's just look at Tom's question about the 4,500 tip bar chart. Because here it is, a continuous contract, day and night session. This is today's activity. This was the open today. This was the close on Tuesday, and this was Tuesday's activity here. And this is the exhaustion pattern that Tom is talking about, with then a little bit of exhaustion patterns on the downside after that. So we got, if you look at the kind of the background, what's kind of going on, we tested down into the 1915 kind of area. This is Monday's trade. Exhaustion patterns and bullish divergence comes in. We hold here. The next day, on the Tuesday, we come back in, more exhaustion on the downside, bullish divergence, and we hold here. And then overnight, we put in a flush pattern. So in the background, you've got all this. You've got exhaustion, you've got bullish divergence coming in, you've got flush. So all of this is supporting a rally. So that's why we got the rally after a little bit of weakness and testing with today's activity. Bang, we broke into an uptrend. So we've been fussing around over the last day and a half with these support resistance. No breaks on the 4,500, but today we got the break. There's that blue professional bar going through resistance. That's jumping the creek, taking us into an uptrending move. Didn't get very far. We kind of broke about 4 points, 5 points kind of above that before we got the exhaustion pattern on a left shoulder. So I would expect a pullback to end of trend sequence here, but Tom's question is, If you're expecting that, why did we get these exhaustion patterns with these little kind of pro-signal exits kind of going on? I always think that means that that's professionals kind of selling early. There's a lot, once we reach those new highs, bust those stops, the blue professional bars start to come in, taking profit, resting sell orders, all that kind of good stuff. There are people that jump on board and say, I'm out of here, I'm ditching it, I'm not necessarily going short, but I'm certainly getting out of my positions and kind of squaring off. And that's that exhaustion kind of selling. It's an extreme amount of selling before taking profits effectively at those highs. So you do see that after an exhaustion pattern here. It's not ending the move. It's like, for the right place to be, it has to be at new lows in order to kind of end the move. All it is kind of extreme profit taking with a lot of volume kind of just getting out of the market. We usually test back up. We usually go back to a pullback to end of trend kind of signal, and then we start to see the bearish divergence and flush patterns kind of coming in, and that's when we start to roll over and break down into a downtrend. So that's what those exhaustion patterns there. So Tom, hopefully that kind of explains what those buys and sells signals, the exhaustion patterns on the 4,500 2-bar chart. Just as a clarification, they're not really buy and sell signal. They're just showing demand and supply, the extreme is kind of going on here, the exhaustion buying going on, and then the exhaustion selling, just anxious to get out of their positions and selling short, creating those large kind of exhaustion patterns there. So that's the 4,500 2-bar chart with exhaustion patterns there. This little email came in from Mario after Monday's activity. So again, talking about a similar type thing. Hi Barry, just emailing you for a question about yesterday's trade, Monday. My thought is that you normally follow the 4,500 2-bar chart volume trend. Yesterday I was long because I didn't see any exhaustion buying pattern in that time frame. In fact, I saw an exhaustion buying on the 1500 2-bar chart, but without resistance, broke to the left shoulder, blah blah. I waited, made 4 points after going long at 10 a.m. But I've been very surprised when I watch your trade going short at 8:35. So good that you waited for more of a confirmation, and great that you made that long trade, which is a nice little reversal that I talked about after Monday's activity. Since one of your 4 deadly sins is no volume confirmation, I'd like to ask if you follow the trend volume 1500 2-bar chart, or do you try and sync it with 4,500? Very grateful to you and your indicators. Always trying to improve my trading. Thanks for your effort, Mario. So, in response to Mario's question, first thing to say is I'm always looking at the middle time frame for my exhaustion patterns. So on my day trading charts, I've got the 500, the 1500 and the 4500. The middle time frame, the intermediate time frame, is the 1500 2-bar chart. So that for me is the most important ones, and that's where you'll get the exhaustion patterns kind of showing up. Sometimes the exhaustion patterns will show up on 1500 but not 45, just because they're not extreme, and then sometimes you get extreme patterns that show up on the 15 and the 45. So that's why I kind of use the intermediate time frame, because that catches all of those kind of exhaustion patterns. So let's go back and just have a look at kind of what was happening, the setup for Monday's trade, kind of going short at the get-go, and just show you what I was seeing. So this is the open on Monday here, and this is the overnight. This is the Sunday night where we kind of started to race away, break up to new highs at 24. Friday's activity, we'd had some bottoming. We'd had exhaustion, we'd had flush, we had more exhaustion, bullish divergence kind of comes in, and we'd raced away. But we had an exhaustion pattern on the 1500 2-bar chart there. It wasn't incredibly strong, but after that we had a lot of selling. That similar pattern to the kind of extreme selling of profit taking that I was just showing on today's 4,500 2-bar chart. This is squaring out positions at the end of the week. People happy, but the 1920s to get out, and they're profit taking and so on. So that's pretty extreme there. Couple of things. Normally what I would expect after an up day with an exhaustion pattern, what I normally look for is a continuation of flow through the following day with another exhaustion pattern before 11 a.m. For a potential reversal of that next day. Now it's a little bit tricky with a Friday flowing through into a Monday. Psychologically the the connection between the Friday's trade is kind of psychologically lost over a weekend, so sometimes you don't get that, but that's normally what I'd look for. If you go back to the video on Monday when I was actually taking that trade, it was pretty not suspect, but I was quite willing to jump out if it didn't work. We were starting to break down through supports on the 500 first of all. We had amateur up bars on 500 and it looked weak, and we'd had this triple top with blue professional bars kind of coming in, so it was kind of rolling over there. So it was looking a little bit suspect. I was willing to take a little bit of a gamble, but if it didn't work out, just jump out straight away and wait for maybe an exhaustion pattern. But it did work out. It kind of quickly went in my favor, and that's when I just decided to hold on to it. So we ended up with an exhaustion pattern on the downside, pull back to end of trend, and this is kind of picture perfect reversal when we start going the other way. So the answer to Mario's email is I'd actually looking the volume trend, the volume momentum trend that he's referring to here. I actually look at the 1500 tip bar chart because of that, not the 45 necessarily. The reference for me is the intermediate time frame, so 1500 tip bar chart. That's the most important. So that's why I was taking that trade. Sometimes you get those exhaustion patterns that continue after the previous day's trade. In this case, I would have liked to have seen it there, but I was taking a little bit of a gamble when I went kind of short there because it didn't show up on that chart. But you get lucky sometimes. There's plenty of times when I'm unlucky. So today's trade, for example, was a break-even day for me after 6 trades. Just couldn't get it together. But you win some, you lose some. Now, last thing to say is on this whole question of intermediate time frames and exhaustion patterns, just going up to the highest time frame tip bar chart. So the highest ones I look at are the 4,500, 3 times that's 13,500, 3 times that 40,500. This is the one I'm looking at for kind of bigger picture, whether we're going to kind of reverse at the moment. And this is kind of the story that we've had on this intermediate time frame. We broke into this uptrend here with exhaustion. We'd had exhaustion sell signals and bullish divergence come in, exhaustion selling, bullish divergence, bang. We've been ripping higher because of this, and we had exhaustion buying getting this move going. Okay, here. This one was on a left shoulder, but we just kept on powering through higher and higher until pullback to end of trend came out. And this is all the selling that's been going on into these dips. People have been really anxious. This one was a fairly big reading, exhaustion sell 13,500. They're really anxious to sell. A lot of people kind of selling down this, but you can see it's incredibly weak, the amount of buying. If you look, better momentum is barely cresting above the 0 line here, and it just shows that the buying into these highs is just getting really tough. We've not seen those exhaustion buying patterns to kind of really kind of max this thing out and kind of turn it around. I don't know whether we're going to see it on these higher time frames tip bar charts. It's not unusual on the daily and the really high time frame charts to not see exhaustion patterns, because you can roll over from no demand, but you definitely see them on something like the 4,500 tip bar chart, and I'm surprised we've not seen them yet on 13,500. So it's not rolled over yet. Plenty of people anxious to sell at the moment, and so as soon as their stops get busted up and we kind of break to new highs and just kind of creep higher and higher, they're under pressure, and that potentially puts more fuel on the fire as they have to reverse or get out of get stops hit and so on. So kind of wait and see. A little bit of discussion there on exhaustion patterns. So hopefully that helps answer those questions for Mario and Tom, and hopefully if you're interested in exhaustion patterns and how I kind of look at them, that helps you as well. Good luck with your trading over the next couple of days.